Now, some of the Kenya's major commercial banks, Absa, Stanchart, to mention but a few, have released their earnings this week. For a review now on the Kenya banking earnings, we're joined by Erick Mokaya, founder of Mwango Capital. Erick, always a pleasure speaking to you. Biggest standout for you when it comes to this 66%, yeah, heard me right, 66% growth of Kenya's commercial banks?
Yes, I think if you look at the numbers for 2021, Kenyan banks seems to be doing extremely well. I would say it's mostly driven by not top line growth, but more by a decrease in provisions. So it's not kind of a sustainable level of growth. So when you see them posting like 68% growth in profits after tax, say for a company like Stanchart, it's just driven by a reduction in provisions by around 47%, I think, for Standard Chartered, so to speak. Top line growth, say for Standard Chartered, was around minus 2 or 3%. So if you look at the growth in terms of net income for most of these banks, it's not that strong. It's just provisions which are being reduced. So I wouldn't be too excited. I would maybe, I'm looking forward maybe to check the results for 2022 so I can be more confident about the sustainability of some of these banks' results this year. So that's what that would be my top line comments on the bank's performance so far.
Kind of a pessimistic view there, Erick. Talking to a few from some of the banks there, Cooperative Bank, Absa, Stanchart, and so they're very buoyant. They're very bullish about their growth. In fact, when you look at their dividend payouts, they seem to be over the moon. So bringing us back to earth, or bringing the banking sector back to earth with your comments, why isn't this growth sustainable for them?
Because I think a reduction in provisions is not, you can reduce provisions this year, but then again, if you listen to the latest earnings from KCB, they're a bit pessimistic about their asset, the quality of the assets that they have, the quality of the loans that they have. And for KCB, they kept citing that the hospitality sector is yet to recover. And then we have these issues around Russia and Ukraine, which is affecting global growth. And prices are rising across the globe in terms of petrol prices, which has a ripple effect across the economy. So you have small businesses are highly impacted by the latest war, which is on top of COVID, which is on top of an election year that is happening in Kenya. So personally, I wouldn't be too excited. I would be more cautiously optimistic. About banks resuming dividends, I mean, that was to be expected given that most of them stopped dividends in 2020. So I think in 2021, they had a bit better visibility. In 2020, they increased provisions a lot, maybe overextended their provisions. So now they are scaling back on those provisions. So I think in terms of comparing to 2020, it's much better. But then again, we're going to do a little bit of analysis and check how the results compare to 2019. And that would give us a bit of a better picture if we're back to normalization or not. So I would more of be cautiously optimistic for 2022, given all the things that you're having to deal with. And this is just the third month of the year, and we already have war in Ukraine and rising global prices and commodity prices that are growing very rapidly across the globe, and which are coming up to Kenya, where this week they raised the petroleum prices by almost Kenya shillings 5, which is substantial given where we are. So I would say that once again, I'm cautiously optimistic about where the prospects for banks going forward.
A few topics to talk about there, but we could be digressing. I want to come back to what many of the bank statements are saying, and they cite things like investment in digital channels across. But I want the reality of that, Erick. The investment in digital channels, is it really paying off?
It is for some of them. I think some of the products that they've launched, they've attracted a lot of youth. I would say, I personally do use a bank like Standard Chartered, and I can say the digital provisions have been extremely powerful, especially during the pandemic. I have never had to go to the bank myself I can't even remember the last time I was at the bank branch to make a transaction, but I think most of this is happening online. Equity Bank has also been very much at the forefront, saying that they are really investing in the digital platform. The Absa also investing in digital platforms, all of them. So I would say it's only, I think in the last year, you'd say it's only NCBA which has been saying that they are actually increasing the number of branches. So I would say them going digital is being asset light in a way that helps them to reach out to more people using fewer assets, which may increase the return on investment or the return on equity, I would say, going forward. So there is a little bit of truth in that. They've heavily invested in some of these platforms, and this may pay off going forward. The bank that wins is the one that definitely resonates a lot with youth, because, as you know, a huge percentage of our population is youth, and they're on digital platforms. They want to make sure that they do their transactions online, they make their payments online, and they're able to access their money without that much friction of having to go to the bank. If you remember, in the old days, you have to go, a bank statement had to be in physical paper. Now you can receive it online, you can check your transactions online and all this. And of course, M-Pesa empowering some of these banks like KCB and their performance. For instance, during KCB's earnings, you could tell the CEO was very excited about how Fuliza is doing as a digital kind of loan app, loan platform that they're giving to a lot of people out there. So I would say there's truth to the fact that they're investing in digital channels.
Erick, we need to wrap up this conversation, but I want you to give us in just 5 words what you think the outlook is going to be like at the end of this year for many of these banks.
I would say it's going to be a bit better. I may have painted a pessimistic outlook, but I would say like some of them, like they're going to perform really well given the scale of growth that they're doing. Let's say like Equity Bank investing in DRC, KCB investing in Tanzania. So I think some of this will pay off well. KCB also investing in Rwanda lately, I would say. So I think some of these banks are going to be doing quite well. Some may be dragged back down maybe by the fact that some of these hospitality industry may not have recovered by the end of the year. Let's say like KCB also once again. So I would say, generally I would say like the outlook is once again, cautiously optimistic.